So the idea of retiring on cryptocurrency, specifically through generating a sustainable cash flow by investing in blue chip cryptocurrencies rather than shitcoins, has been seen as the holy grail of investing in the cryptocurrency and DeFi space, particularly because of the relatively high returns to risk that you are taking. What is going on, everyone? Welcome back to the Baking Analyst channel. Today we're going to be talking about how much you need in order to realistically generate a livable amount of cash flow from providing liquidity to real yield protocols. Our discussion today has two main rules, which are first, blue chip cryptos only, and second, investing in projects that have real cash flow and therefore real yield. We'll be looking at the top 5 different real yield protocols that allow you to earn passive income with underlying blue chip crypto collateral, as well as how much you actually need in order to make a certain amount per month or even retire in certain parts of the world. Let's jump right into today's video. So the first thing that we want to be talking about is what this whole narrative is about. Now, in the previous video, we talked about how things like GMX are a different type of liquidity provision narrative wherein you are earning yield based off trading fees, but these trading fees are actually paid to you in the form of blue chip tokens, in this case, Ethereum. So these fees come from the liquidations of traders who might be placing leveraged trades, as we see on GMX over here, or fees that they pay when trading among the coins in the GLP. What we're particularly interested in is not all those mechanics, while they're important. What we're interested in is the underlying composition of such liquidity pool tokens, which are things like Ethereum, Bitcoin, Chainlink, as well as a diversified list of stablecoins. So all of these are what I would call more blue chip in a sense. Uniswap, I'm on the fence about it because it's just a DEX token, but everything else, those are good plays that I would be comfortable with holding. So I went on a mission to find out what other alternatives there are, because developers love forking stuff. And actually, some of you might be familiar with this. You can actually search for forks and find a whole list of them on this site over here. So you have things like Mycelium, MetaVault, Mummy Finance, MadMax. So they're all over the place. So if you want exposure to Matic, you can get it. If you want exposure to Phantom, you can get it as well. And of course, Optimism, which has been pumping like crazy in the past few weeks. So let's have a look at the top 5 protocols apart from GMX that we can consider. And at the very end of the video, we'll be revealing the final amount on how much you need to retire on DeFi. So the first one on the list is actually called MadMax. MadMax is on the Polygon ecosystem. And what I like about it is the fact that it is very simple. There's no BS in this MLP composition. There's just Matic, Ethereum, Bitcoin, and USDC. While the stable coins might be less diversified than desired, and at a 40% weightage, you can't argue with the blue chipness of the other coins in this MLP. None of them are particularly degenerate. Most of them are pretty solid plays. Matic, of course, being one of the leading layer 1s as well as layer 2s with their Polygon ZK EVM. Ethereum, no introduction needed. Bitcoin, same thing. So that was one of them, and currently they are paying out 115% APR, of which about 50% is actually paid in a native token. So realistically, the real yield is somewhere around 50 to 60%. So that was the first one. The second one is if you want to get exposed to the crazy hot Optimism ecosystem, that is called OPX. And this is yet another fork. We do see pretty solid tokens down here as well. Some exposure to Optimism, but of course, not too much. The weight that is given to OP is not particularly high here. So that gives you some exposure, some upside exposure rather, in case you want to play on any of those speculative airdrops, and also benefit from the price pumps on OP when other people ape into the ecosystem to speculate on those airdrops. So once again, another good play. And as you see, in terms of APRs, they are doing about 76%, and that is actually paid out in ETH. So that looks really, really good. Although one caveat is that the current amount staked is still relatively low, so there might not be that much room for people. But then again, it's a bear market and people generally aren't interested, and that is why it is a good time to go in right now to enjoy these high yields while you can. The third one on the list is in the Binance ecosystem. If you want to play with BNB, you can go onto Eldorado Finance or Eldorado Exchange, and in this case, we can see that there is quite a considerable weight that's placed on BNB. So BNB is driving the price of this token much more than something like Ethereum or Bitcoin. So again, I'll be more cautious with this if you're not totally into the whole BNB hype. But one thing good about it is the crazy high rates that they're paying right now, 293%, although quite a bit of that is in vested tokens, which by the way just means that they don't unlock immediately. If you go to the earn page, you do see that the trading fee APR is actually around 167%, which is still very, very good. Number 4 on the list is MetaVault. MetaVault is yet another Polygon play, and as you see, it also contains your favorite stuff like Matic, Ethereum, and Bitcoin, but does also include some some other DeFi plays like Uniswap and Aave. However, of course, the weight is not that great. It's just about 1% and 1% for both of the DeFi coins. So not too bad. This is pretty similar to MadMax in terms of its functionality and in terms of its composition. So you might just use it to diversify your counterparty risk. Finally, the last alternative that we'll be talking about will be Mycelium. Mycelium is on Arbitrum as well. This is looking to be a competitor, or rather a direct substitute to GMX and GLP. And looking at this, what tokens they contain? Well, also a very similar mix to GMX. So as you see, all these coins down here, they currently have a target weight of 0%. So those are going away in short order. Very soon we'll just be left with this lot at the top, which is basically the same as what we had in GMX. So again, this is just a way for you to diversify. In terms of APRs, we see an APR of 31%, of which 31% is actually in ETH. None of it is in their escrowed whatever token, which is basically a token that vests over time and is locked for quite a while. So let's say you actually wanted to go about doing this whole retire on DeFi thing. And we have the various APRs on the various farms that we've just gone through. MadMax about 100. Let's shift that back down to 60% because we said that we were going to exclude the MMF emissions. Then we had GMX, that's 19% as of now. OPX, let's say it was 50% a day ago, now it's 70%, but let's leave it there just to be conservative. Mycelium again 30%, Eldorado 160%, which is crazy, and MetaVault at 15%. So looking at this lot, we have an average APR of 56% and a base case APR, or pessimistic or conservative APR, of 28%. So that's to say that if you wanted to retire somewhere cheap in the world, like Thailand for instance, on $3,000 a month, you would need either $65,000 invested across all the platforms at a rate of 56%, or at the conservative rate, you will need about closer to $130,000. If you want more, if you want up to 10K a month, similarly, more capital will be needed. However, the amount that's listed up here of 215 to 400K does seem to be relatively lower than what we would expect when we are talking about things like retiring or living off passive cash flow, where people usually think you need to have millions of dollars. So hopefully now you have some idea of how much you actually need to retire on crypto, whether or not it is realistic for most people. Well, I don't think it is too realistic for most given the riskiness of the whole market, but an interesting thought experiment nonetheless. But believe it or not, this is only one way that we can generate sustainable cash flow in the crypto and DeFi space. If you want to see more ways that you can do exactly this, check out this video over here where we talk about exactly that and cover the other ways that you can generate this sort of income. With that being said, thanks for watching and I will see you in the next one.